So good afternoon, good evening, and now apparently good morning for Ken. So thanks everyone for being here. My name is Moshe Bellows. I'm the managing director of Maccabee Ventures and I'm one of the co-founders of the Amplify Investor Summit. I just wanted to give a brief, literally 1 minute description of the Amplify Summit and why we started it. We looked at the data, frankly, even before October 7th, and family offices, foundations, federations are um, significantly underweight Israel as an investment class. Ruthie, myself, and Yael thought that that was just just silly on a lot of levels. From an investment perspective, from a nationalistic perspective. And so we wanted to put something, and then all these conferences and funds came up, but no one was really focused on the family office or the foundation or even the federations. And so we thought that we wanted to do it, but we wanted to do something like that in a differentiated way. So we created a very small, intimate conference. Where we're taking cohorts between 15 and 25 and bringing them to Israel. And in 2.5 days, showing them 5 asset classes, which include early stage, late stage, hedge funds, private equity, real estate, and the public markets. And by doing so, they can develop real, authentic relationships with folks in Israel because the overall feedback that we were getting from everyone we were talking to was network and access. These folks lacked a network and they lacked access. So what we wanted to do is bring that network and access to them. The cute thing about our conference, for those of you that are registered already, and for those that aren't registered yet, we'd love to have you. We're closing registration on Friday, unless we extend it miraculously. But the cute thing about our conference is the funds that come, the companies that come, the founders that come, they're not allowed to do a frontal pitch. So, I ran a family office for 16 years, and it was really annoying when people would just constantly and effervescently pitch you frontal pitches. And so it's about developing meaningful relationships. And so in 2.5 days with Amplify, you get to do that. That's my 1.5 minute pitch. Robin Rockland was who I see now was was at our conference last year. Amy was there last year. And so after this presentation by Brian, we're more than happy to field some questions about it. And if you want to stick around, we'll ask any questions that you want. That's what I got. And now it's my pleasure to introduce Ruthie Rotenberg, one of the other co-founders, to introduce our speaker. And this is some of the stuff that we like to do. We like to introduce you to, folks that are in the ecosystem, that are doing great things in the ecosystem, and educate our delegates in that way. And so that you can become smarter about accessing the resources that are at our disposal.
Thank you, Moshe. And thank you. This is our first Amplify Summit prep call, and we are very excited to have Brian Friedman and his partner Amy Kaufman from Israel Investment Advisors. This is part of the prep to coming to the summit. So the more educated you are before you come, the more you can get out of it. Brian and Amy are from Israel Investment Advisors, who are very strong supporters and very good friends of Amplify Summit from day one. Brian even spoke last year, and I am very excited to have Brian here to do our Capital Markets 101. And I am going to pass it over to Brian, who will give you his background, and Amy's also here to answer some questions. And again, Moshe said, if you want to stay on after Brian's presentation to ask any questions about the summit, we'd be happy to answer them. Brian, I'm handing it to you.
Ruthie, Moshe, thank you. Let me share my screen. Hopefully you can see Israel's Capital Markets 101. We're going to spend about 25-30 minutes today, sort of on a speed date with the Israeli stock market primarily, but Israeli capital markets more generally. Let me just tell you a little bit about who we are and who I am. I started the parent company of Israel Investment Advisors 26 years ago, and we manage $2.9 billion. 15 years ago, we started our subsidiary, Israel Investment Advisors, to manage a limited partnership focused on Israeli publicly traded stocks. We are among 6 funds that we're aware of, frankly, to American investors, of which we are one of the very few that are actively managed, and we manage $75 million in our limited partnership. Our approach is something that Warren Buffett would approve. We invest in profitable companies with strong balance sheets and reasonable valuations. The objective today, as Moshe said, is not to pitch you on our fund. Instead, it's to essentially pitch you on Israel, on the Israeli capital market. And it's been our experience that many people, even very knowledgeable, very committed Zionist Jews, are unaware of Israel's capital markets, their scale, their scope, and the opportunities available. So I thought, let's start by doing a brief tour first of the Israeli stock market. Now, we define the Israeli stock market as companies who are headquartered in Israel. That includes companies that are listed and traded on the Tel Aviv Stock Exchange, but it also includes companies headquartered in Israel, but listed outside of Israel, mainly in the United States. And the overwhelming majority of those companies are, of course, technology companies. If you take that definition of Israeli headquartered domiciled companies, the value of the Israeli stock market as of the end of the quarter was about $550 billion. Let that sink in a minute. Yes, Israel is a small market relative to the $60+ trillion in the United States. However, many people are surprised to learn that the Israeli stock market, a country of 10 million people, is more than $500 billion. There are 454 publicly traded companies. We say above $25 million in market cap, just to make it tangible. There are only 10 Israeli companies that have market caps above $10 billion. So, for example, in the United States, there's been a lot of scuttlebutt about the Magnificent Seven, like NVIDIA, Microsoft, what have you. NVIDIA is now the world's largest company by market value, in excess of $5 trillion. There are 10 Israeli companies and only 10 whose market values are more than $10 billion, and only 3 of those approach $30 billion. So we're dealing with predominantly a small and mid-cap and micro-cap market, which is why we believe indexing, which is the majority of the funds available to the public, is not the best way to go in Israel. Fundamental research is. Of course, that's what we do, and that's because as you start to drill down, there's 89 companies whose market values are $1 to $10 billion, 220 companies between $100 million and $10 billion, $1 billion, typo, and 135 between $25 million and $100 million. There are 121 Israeli companies trading outside of Israel. Most of those, almost all of those, with only 1 or 2 exceptions, are traded in the United States and are in the technology sector. More broadly, I put the growth of Israel's capital markets here through 2023, just because I wanted to show what was going on before the war began. Of course, there's been quite an expansion in Israeli government debt over the last 2 years. We'll discuss that in a minute. Israel borrowed a little more than $70 billion to fight the war over the last 2 years. So on the cusp of the war, the Israeli capital markets collectively, including stocks traded in Israel, stocks traded outside of Israel, government debt, corporate debt, collectively exceed $1 trillion in traded value, and that's been true ever since 2021. So Israel, from a capital markets perspective, is more than $1 trillion and growing. I thought I'd just take a brief moment and talk about the technology companies that trade, Israeli technology companies. Israel is known as the startup nation. Startups are, as you know, companies with limited revenue, typically losing money, requiring large amounts of investment capital, but with promising hopes that they will eventually develop large revenues and profits. Well, there are 184 technology companies, mostly listed in the United States. We break them down into the following 4 categories. The first one we label our zone, mainly just to distinguish, the types of companies that we look at, which are not startup nation. We like to refer to these companies as scale-up nation. Israel is a startup nation, but it's increasingly a scale-up nation. There are 46 scale-up nation technology companies. Their cumulative revenues are more than $50 billion, and these companies are producing a cumulative $8 billion in profit. As I mentioned, there are 184 companies. Of course, these are the minority. You also have startups, companies that are essentially still burning investment capital with significant growth, but they've reached well beyond that initial startup phase and are starting to generate some revenue. Those are still losing money, but are on the cusp of break even and are generating collectively more than $9 billion in revenue. Also included in that category are the third category that we call overvalued. These are very hot startups, 7 of them at the current time, with very high valuations, but not yet quite firing on all cylinders in terms of revenue or profit. $1.6 billion in collective revenues and basically breaking even. This category fluctuates. In 2021, there was a wave of IPOs. There were probably the majority of the startup category we had in the overvalued category. But since 2022, 2023, the share prices have come way down, and there's not as many in the overhyped, overvalued category. Then finally, there are 60 Israeli technology companies that essentially are yesteryear. Israel has been a technological powerhouse now since the 1990s. There are companies that went public in the 1990s and the early 2000s that have already peaked and started their descent, hopefully not towards failure. Some may get a reboot. That has happened on quite a few occasions in the past. But these companies are producing about $9 billion in revenue, but losing a little more than $1 billion. That's the landscape as far as technology company goes, as far as we see it. We write quite a bit about this subject, as well as many other subjects. Because of time constraints, I'm not going to drill down into specific companies or their stories, but suffice it to say, you can always go to our website and we'll send out the link. Okay. You might be surprised to learn that the Israeli stock market, as measured by the Tel Aviv 125 index, is up quite substantially this year, almost 40% in dollar terms, and almost 100% over the last 12 months. Israel has had a substantial revaluation over the last 12 months, and that's been despite the economy facing some, as you might expect, significant headwinds. Well, the economy, despite those headwinds, has been resilient, but earnings are lower, revenues are lower, and GDP is lower. Not by a lot, but it's lower than on October 7th, 2023. So why is the Israeli stock market doing so well? Well, this chart, we believe, helps to summarize what's gone on over the last several years. We believe that risk perceptions have fallen very dramatically as Israel's military success is mounted. What we are showing here is a common metric evaluation called enterprise value to EBITDA. Think of it as the value of a company divided by its cash flow in a way that is comparable across countries, tax systems, and accounting systems. And what we did is we compared that metric over the last 10 years to the same metric for the S&P 500 and showed what the valuation gap is, what Israel's discount to the United States has been over the last 10 years. Israel always sells at a discount to the United States. As you might expect, number one, it's smaller. Number two, its companies are substantially smaller. But more important than those two things is number three, Israel, of course, has much more severe security risks. Well, despite those security risks, if we go back to the years prior to COVID, typically the Israeli stock market sold between 70 and 80 to 90% of the value of the S&P 500. Starting with Israel's draconian COVID policies, followed by interest rate hikes in 2022, followed by the judicial reform in 2023, followed by the war. So as you can see, more than 4 straight years of restrictive policies that have injected a degree of risk into Israel's financial markets. The spread between Israeli valuations and American valuations grew to be quite wide. In a very short period of time, over the last 12 months, that we have seen a major reversal. Israeli valuations have snapped right back to the low end of their historical norm relative to the US. We believe that is largely due to Israel's military success and probably investor confidence that there will not be a repeat of the domestic strife that surrounded the judicial reform. Not that there won't be reform to the judiciary, but financial markets are telling us that the future is unlikely to be as draconian as the past. We shall see. Despite that, you will see that the Israeli market still sells at a very substantial discount to the US, despite the 100% gain, roughly, over the last 12 months. I'm not going to go too deep, but I just wanted to emphasize there are universal principles of investing that we follow, meaning, as I mentioned, Warren Buffett 101 applies to Israel 101 as well. What is the value of a company? The present value of its future cash flow. You look at all the same metrics in the Israeli market that you do in any market. Price to earnings ratio, as I just mentioned, enterprise value to EBITDA, et cetera, et cetera. Nothing changes. The basic fundamentals that you need to look at as an investor, it's the exact same. However, there are some elements that are unique to Israel that have historically made Israel an interesting place to invest. Of course, I just mentioned security. Security is why Israeli stocks are cheap. They're less cheap than they were, but they're still cheap. And I would argue security is the reason that the Israeli market almost always sells at a discount relative to the United States. Scale up nation. I mentioned that a minute ago. That's what we'll drill down for the rest of this presentation. Post-Bahar reforms. That is way too much in the weeds, but incredibly important. Israel has been consistently restructuring its economy Israel is in the middle of what I like to call its Teddy Roosevelt moment. It's injecting competition, it's dynamism, capital, and it's all due to a wave of reforms that Israel has enacted starting in 2005 with something called the Bahar Commission, and has doubled and tripled down on those reforms ever since. We're not really going to address that today. Feel free to go to our website. We have written very extensively, including a large research white paper that covers this topic in depth. Israel is a very rapidly growing country. It has the fastest population growth in the developed world. Not by a little, but by a lot. Israel, over the last 15 years, and why 15? We started our fund 15 years ago. So I did a little chart with what happened over the last 15 years and what demographers project over the coming 15 years. To put things in perspective, the US population grew 0.7% per year during this same period. Europe grew by less than 0.5%, close to 0.1%. Israel is the fastest growing population in the developed world by a very wide margin. The Jewish population is rapidly growing, and it's not entirely Orthodox. If the non-Orthodox were a country unto themselves, they by themselves, not including the Orthodox in Israel, by themselves would be the fastest growing developed country in the world, non-Orthodox Israelis. Yes, the national religious and the Haredim are growing faster, but people don't fully appreciate that there actually has been a bit of a decline in their birth rate, particularly in the Haredi sector, as more and more women have entered the workforce, and it looks highly likely in the next 15 years, men will not only enter the workforce, but a certain percentage of them will enter military service. That may slow some of their demographic growth. And another surprising feature that many people don't really understand, Arab Israelis are growing, their population is growing about as fast as non-Orthodox Israelis. Rapidly, but not more rapidly than the non-Orthodox population in Israel. The demographic trends are not that bad. In fact, I would argue they're pretty good. That is very contrary to the public debate in Israel, but I think that these trends will become more sharply in focus as more and more of the debate post-war, hopefully post-war, starts to emerge around the Haredi sector in particular and military service. All right, I'm going to just wrap it up in rapid fire here. Before the war, Israel had the lowest debt to GDP ratio of any developed country in the world. It was about 60% debt to GDP on the eve of the war. They borrowed almost $70 billion to fight the war. They increased their debt to GDP to about 70% of GDP. They are still the least indebted country in the developed world. Their debt is 30 percentage points lower than the United States. Fiscal conservatism in the years prior to the war has paid off big time in Israel's capacity to finance the war as well as support its population in the post-war recovery. Finally, I mentioned the post-Bahar reforms. In 2005, Israel enacted some serious reform to its pension system. Imagine a 401k system like we have in the US, just to make it simplified for most of the people on this webinar, except it's about 25% of income and mandatory for all workers. Israel, over the last 20 years, has moved from modest savings to the highest savings rate in the developed world. It has the fastest population growth in the developed world. It has the highest savings rate in the developed world. And it has the highest economic growth rate. Let that sink in for a minute. That is why Israel, at least during the 15 years that we've been operating our fund, has been so successful from a capital markets point of view. I'll just wrap up because we just finished the war, we hope. You might be surprised to learn that over the last 15 years, Israel cut its defense budget. It grew by only 1.5%. And why do I say they cut it? Because that's less than the rate of inflation. They shrank their army in absolute terms. There were fewer soldiers in the Israeli army on the eve of the war than there were 15 years ago. Obviously, there is a major reversal on all fronts. Spending will probably stay elevated for as far as the eye can see. The army will expand one way or another, and Israel must grow. It has no choice. Its economy must grow. One of the reasons Israel has consistently enacted package of reform after package of reform is because of this. It has absolutely no choice but to double down on economic reform and to stimulate growth in its economy. Coming out of this conflict, Israel will most likely, as it has every single time that it's exited a round of conflict, put together a package of very substantial economic reform that will refire its engines and refire its capital markets. And it has the population and the savings to do it. That's why we invest in Israel. That's why we hope that you and the Jewish world will start to learn more and more about investing in Israel. And that's why we compliment Ruthie, Moshe, and Yael on what they're doing to get this message out to the Jewish endowment world. Thank you.
Thank you so much, Brian. We wanted to make sure that everyone, we committed to 2:30 to 3, but those of you that have to go, great. Those of you that wish to stay, please stay. Brian and Amy, I want to thank you so much for sharing. It's part of our educational journey, and this has been a great start, and we appreciate your participation and your support. If anybody has any questions for Brian and Amy, feel free to do that. And if anybody wants to stick around and ask some questions about the Affinity Summit, the Amplify Investor Summit. I don't know why I just said Affinity. That's funny. The Amplify Investor Summit. That's my CRM for my business. Amplify Investor Summit. We would love to field some questions. So you can take yourselves off mute and ask whatever you want.
Thank you, Adam and Amy, and Brian and Amy.
Well,
Any
You
questions?
did such a great job. You did such a great job. Any questions for Amy and Brian?
People
no
waiting.
worries. You can always reach
Brian's got a question.
I have a question.
Yeah, Brian, I was interested in the comments about the Haredim. I was just reading an article a couple of days ago, which was saying exactly the opposite to you, was much less optimistic and saying that it was both economically and from the point of view of the army, with their growing population, but very much reluctance to participate in the modern economy. It was going to be a real drain. But you sound much more optimistic about that.
Well, I guess like every issue has two sides, and both are true. So on the one hand, I wanted to emphasize that the non-Orthodox, non-Haredi population in Israel is growing very rapidly. So it's not shrinking, it's growing. But it is true that its proportion of Israeli society is falling because the birth rate of the Haredi sector is so much higher. So that's for sure true. The question is, what matters more? The fact that the people who are working and serving are growing in absolute number, or that they are shrinking in percentage terms? I would argue from an economic point of view, it matters more that they are growing in absolute number. The fear is politics, right? That what will the growing proportion of the electorate who is Haredi do to the politics of the country? I really don't know. But I do know that there are some other positive trends, let's say, from an economic point of view. The first is the Haredi women at one time, 25 or 30 years ago, well below half were in the workforce, whereas today 85% are in the workforce. Now, it is also true that many of them work within the Haredi sector, in schools and things of that nature. But it's increasingly true that Haredi women are joining the professional classes, accountants, etc. Haredi men have lagged behind. And despite lagging behind, there has been a slow and steady shift toward Haredi men working. Right now, we're just a little bit above 50% of their labor force participation. Why has that occurred? Because the subsidies that the state has handed out, although increasing, have not increased as quickly as the cost of living. So in effect, over the last generation, the Haredi subsidies have fallen. Israelis wouldn't like it if I said that, because they haven't fallen in absolute shekel terms, but they have fallen in terms of their purchasing power. And that has been pushing more and more Haredi men and women, mainly women, into the workforce. At the same time, the fertility rate of Haredi women has fallen over the last. Now, they're still by far and the highest in the country, double that of the secular Israelis, but the trend is down. So I think that there are some mitigating circumstances, and certainly mitigating circumstances from an economic point of view. What that means for Israeli coalition politics, that's what people, I think, are more worried about. And I think that's highly unpredictable.
Karna has a question on the chat.
Karna has a question.
Yes, how vulnerable are the general economic figures, e.g., like defense, debt, etc., to domestic political unrest or administrative/party leadership changes?
Okay, did everybody hear that? Not very. This is where, how can we say it? There's a difference between political unrest and protest, in my very humble opinion. Protest is absolutely part of the democratic process, argument, debate. This is Brian Friedman, Politics 101. What's wrong with debate? Like, it's not disunity to have people on the streets protesting. It's okay for the Haredim to protest. It's okay for the anti-Bibi coalition to protest, as long as they don't shut down the economy and have general strikes and boycott. You don't see that, really. I mean, on occasion, maybe you see it, and it's a very dramatic moment when that happens, and it usually lasts less than a day. So much of what's going on in Israel, from a political point of view, is not, I would argue, highly economically significant, because beneath that surface is a great deal of consensus in Israel on economics. People don't fully appreciate this. In America, our political divides are economic. In Israel, there's unity when it comes to economic, particularly economic policy. The divides are on, religion, and state, on security. Now, with that said, the war has revealed glaring gaps in Israel's defense budget and its defense systems. Very glaring gaps. And they are going to be extremely expensive. The war itself was expensive, but it is unlikely that the level of defense spending that existed prior to the war, which was $23 billion a year, it is very unlikely that the defense budget goes back anywhere close to that number. It will remain, we don't know where it's going to go exactly, but it will remain elevated, most likely forevermore, to plug the gaps. And as a result, defense spending as a percentage of GDP is probably back to where it was 30 years ago. The only way Israel is going to alleviate its defense burden is through accelerated economic growth. And I think that's very crystal clear. And it's why it was the same scenario after the Second Intifada. It was the same scenario after the Second Lebanon War. After each of those, it was no accident I mentioned the post-Bahar reforms. Bahar, which was a major package of economic reform that really put a lot of wind into the sails of the Israeli economy. They passed it in 2005, just as the Second Intifada was coming to an end. And I think we're going to see something like that again. A major restructuring of Israeli economic regulation, certain obstacles to development in Israel. I think we're going to see reform to the tax system and maybe to some of the governmental, I don't want to say constitutional structure, but much of how the government regulatory agencies in particular operate. I think it's coming. It's been bubbling for years, and the time is now. So I think there's already momentum behind the Israeli economy, but there will be another wave that will put more momentum, just like there's been after every major round of conflict over the last 30, 35 years.
Amazing. Thank you so much, Brian.
My pleasure.
I think we're going to have to wrap up here unless anyone has questions about the conference, the Amplify Investor Summit.
The conference was fantastic, by the way. I loved it, and I recommend it highly.
Thank you.
Thank you so much. We appreciate you. Everyone should have a great day or morning or evening.
Thank you, everyone.